Ladies and gentlemen, a big hello and a very warm welcome to yet another high-impact Leaders of Tomorrow e-forum. Social distancing and lockdowns associated with the pandemic have accelerated the shift towards digital services, including banking. The crisis has also forced established banks to accelerate their digitization efforts, reducing the risk of complacency and potentially closing off openings for new entrants. Meanwhile, the primary target segment for many digital banks has been disproportionately hit by the economic shock, producing opportunities for profitable lending. Are new digital engagement tools truly improving the customer experience? Or given India's diverse demographic, do banks need to revisit their customer service strategies with respect to digital versus physical? Lots of questions, lots of scenarios, some good, some gloomy. And with that, let's get this e-forum kicking. Joining me today is an illustrious panel.
Abheek Barua, Chief Economist and Executive Vice President, HDFC Bank. Siddharth Mahanot, Co-founder and COO, Indifi Technologies. Nadia Sood, Group CEO and Founder, CreditEnable and Ashneer Grover, CEO and Co-founder, BharatPe.
Thank you so much, ladies and gentlemen. Truly a pleasure having you right here in one of our high-impact e-forums. I'm going to open with you, Mr. Barua, as somebody who is the most experienced on this panel, the amount of experience you carry in the banking space. This entire transition that we're seeing, digital banking, neo-banking, all of that, all this new parlance, and there's so much commentary around it, the fact that, COVID-19 has given the much needed acceleration. How do you assess the environment when you look at traditional versus digital, and of course, traditional banks who have tried to pivot and also become digital in terms of users? If you look at India per se, how many Indians are actually using digital banking?
The digitization process has been on for a fairly long time. It's not just a function of the disruption caused by COVID. Demonetization certainly gave a fillip, but again, there was a rising trend of digitization even before that. And it has ceased to be sort of a niche elite product, catering to the top tiers of the bank customer segment, but it has become a mass-based product. If you take, for instance, the Jan Dhan accounts, which are digital accounts, the numbers are 400. The dormancy issue, which was plaguing them, has gone down. Look at the use of Bheem, which is a platform which is largely used by the middle and lower tiers of the population. That now accounts for 30% of all transactions. And in terms of the challenges that banks face, put them as three. The first, of course, to improve the customer experience for existing customers. A large part of that would be the higher tier customers. But to get more customers on board and onto digital platforms, you have to look beyond. And there is enormous opportunity out there, across the country. It's being pushed partly by the huge public policy initiative towards digitization in general. And so you have things like the Common Service Center, which is sort of a white label entity that supports banks. We've taken a stake in that, and we're offering digital products to small traders and so forth. And the economics of it works in the favor of banks because it is a low-cost proposition. It helps us bring our costs down, and we also need high volumes. And I think for the customer also, it is a compelling proposition. And take the case of something like RTGS, which is the simplest digital application that you could think of. I really can't think of anything as compelling as being able to not write a check, but just press a few buttons and get money across to whoever you want to send it to. Ditto for, say, a small company wanting to buy dollars for imports. So, given the fact that it is compelling and a high value proposition for customers, it makes sense, good economics for banks. I think it is expanding at a rapid pace, and it is getting more and more broad-based, especially with the public policy support that we're getting from the government in its digitization drive.
If I could now come to you, Nadia, and give me your overview on how digital banking has been adopted by, let's say, the lower strata of society. One is always aware that the people who are tech savvy, the millennials, CCA, even D possibly, are very fast on the uptake to actually adopt this. It's more convenient for most of us. But how is it petering down as you go below the pyramid, in your observation?
I think it's been a fascinating experience the last 2 or 3, I would say 5 years. When I first set up CreditEnable, a number of people had the assumption that SMEs were not be tech savvy at all, wouldn't want to share data, would never transfer data over their mobile phone. So I think we're seeing this digitization cascading down really far. And we've seen a really big shift during COVID in India with all of the customers we're dealing with, who used to be very much more comfortable dealing on everything offline. They wanted to have personal interactions with their bank, with their lender. They've now moved on to WhatsApp. They're now filling out surveys online. They're now using their phones more and more. And these are not the millennial generation. These are the more bricks and mortar businesses in India that have just had to shift because of the reality of not being able to get around. You just see the huge numbers of people using WhatsApp to transact commercially, for example. It's in the hundreds of millions of people. This isn't going away, and it's not going to be for the classes. It's going to be for the masses.
Let me then move on and ask BharatPe how you see this panning out. And, we've seen payments such a big leap, at least in the last few months. But correct me if I'm wrong, we're still in the very initial stages of using digital payments. So I know, like, right from my bhajiwala to, let's say, a rickshawala to one of your, local tapris, all of them have moved to, digital payments. But how much time is it going to take to make that transition to look at, entities as wholesome banks, like one would, let's say, look at HDFC?
On digital in India, because of UPI, the adoption is going very, very deep. The number of people already on the UPI network, and you have to understand, for them, accessing their bank is actually now accessing their, let's say, HDFC Bank account through a Google Pay or a Phone Pay or a Paytm app. So it's become very easy for folks on the ground to actually access their bank accounts. And those interfaces were not available earlier because they were run by banks, and banks are not here to do tech, right? Like, they have a different mandate. But fintechs, because the main product is tech and the interface is so simple, and especially because of UPI, I think the adoption is having at a very different level. When WhatsApp comes in through WhatsApp Pay, you will see it almost becoming universal within 6 months to 1 year of WhatsApp getting launched, because all of us have WhatsApp as the default app. If I were to ask you which is the one app you want to keep and delete all other, 99 out of 100 people will keep the WhatsApp app. So when UPI comes on WhatsApp, you will see a different level of adoption for banking. So right now it's mainly payments, sending money out or accepting money in. I think the next stage is simply borrowing, right? Or what we call lending in fintech, where people will use the apps to access capital. And from there on, it goes on to deposits, and then to, universally everything which can be done in a bank branch should be done through one of the apps.
Lending as the next stage. Firstly, what is your time frame where you're looking at this actually happening digitally? Faceless banking becoming okay with our cultural psyche? Because, for a host of people in India, having a physical bank and having that concept of going to a bank and meeting people physically, and the fact that, yes, your money is in that bank is something that etched in us. Yes, the centennials and millennials, it may be easy for them to break out of it. But for large parts of population, and for let's say internet savvy population, the less tech savvy population, how big a challenge is this?
So it's not. So our experience is, we've been into lending into the MSME segment, and we see a very good adoption there. So we see people from 1,000+ cities applying on our portal looking for a business loan. So they go to Google, search for a business loan, and land up on our site. And this happens from cities where I haven't even heard names of those cities. And as Ashneer was mentioning, people don't need to do too much. Like today, at least everyone uses WhatsApp. They can click pictures, submit documents through WhatsApp. Internet banking usage is increasing. So people, if they have to submit your bank statements, they can download a PDF and send to you. Even on the repayment side, we've seen very, very few customers would want to give you cash today. They are happy using payment links, making direct payments through RTGS, NEFT, UPI, or other mechanisms that you may give them. So you could send them a payment thinking they can pay from their bank statement. So adoption is really growing. Obviously, on doing a loan fully digital has a KYC angle to it. It is not permitted today to do everything digital. But for example, we would have done say 15,000 loans. We don't meet our customers. We do loans in multiple cities without doing a credit assessment on a face-to-face basis. The KYC part still needs to get done, but there also regulations are changing, things are improving, and people have demonstrated that today you can do a lending transaction completely digitally. If you look at some of the numbers, how every kind of digital transaction grew during the COVID time, highest number of mutual fund folios being opened, highest number of broking accounts being opened. Obviously, all this happened without people going to bank branches. March and April, from what I read, is months when maximum of these accounts got opened, which means that people were transacting digitally to onboard themselves on these various platforms, be it for lending, be it for equity transactions, or a simple bank account opening.
Mr. Barua, I'd like to bring you in here to comment on trajectory digitization journey that we're on. We see pure play fintech players, we see traditional players who are now incubating with all new digital bank and also looking to stave off the digital disruptors. So you're seeing the ecosystem bubbling and a lot of activity, a lot of buzz, and of course, everyone trying to make their market positions. How are you looking at the next 2 years? Given that we're in the midst of a pandemic and we've seen super acceleration, how are you seeing the next 2 years? Are you seeing this big spurt as something that will continue because people have gotten used to it? Or this is a spurt because of the pandemic and will go back to reach levels of normalcy once things normalize?
Well, if I think of the demonetization episode, I mean, there's been, as I mentioned earlier, there's been a very steady increase in the penetration of digitization for about a decade now. In the period during demonetization, there was clearly a upward deviation from the trend. And over a period of time, once the economy was remonetized and so forth, you just went back to the trend. So the trend actually didn't sort of have a step jump. So it is possible, and it depends on the duration of the pandemic. It depends on the kind of behavioral changes it brings about. We could just see a temporary spurt, then back to the trend. My point is that the trend itself is extremely encouraging. And as you mentioned, that this ecosystem has grown even before COVID hit us. And it is offering a whole range of opportunities for diverse players. And there is room for all of us. Just because we started as a traditional bank does not mean that we will remain brick and mortar. I think for us, digital is the way forward. And the way we think about it is that the nimbleness with technology has to be adopted, obsolescence sets in and so forth. We'll have to think of ourselves as a digital entity and not just sort of graft on digital services onto our more conventional products. But I think we are very clear about the fact, and I think most other large banks are, that the way forward is digital, and ranging from the millennials to the small SMEs to even people in the rural geographies, we don't see adoption as a challenge. Yes, I think in the rural and semi-urban areas there is initially some resistance to operating digitally. They want to see a brick and mortar branch, but it is fairly easy to sort of move them on to a digital platform or a digital transaction mode. Large banks are grateful to the fintechs for contributing and leading to the richness of the ecosystem. But as I said, there's space for all of us. And given the fact that there are financial services is not like FMCG, there is bound to be regulation that comes in because financial entities have a fiduciary role. The other thing is that the way forward in achieving more rapid growth is for our financial institutions, particularly banks, to grow much bigger. Were that to happen, I think fintechs will have to make a choice as to whether they want to go it alone, and they might very well go it alone in areas that they understand much better because of their technology and analytical product, or they might want to align with large banks in the digital journey forward. But digital clearly is the way forward, and there is enormous opportunity in terms of market potential. Just to give you an example, only about 10%, I think, of retail transactions are now digital. So you can imagine the kind of potential that lies ahead. Internet connectivity is growing, everything's growing. So the future is digital, whether you are a traditional bank like us or whether you are a small fintech player. I think that's a given, and that's an axiom we need to work with.
Sure. Let me take that forward, that thought, where you're saying the future is digital and there's no question about that. My question to you is it really an either or is it a brick and click? Because and Nadia, maybe you can answer this question and, bring in some global perspective. Because we have seen digital banks, whole neo-banking, so much before, we've seen any kind of movement here. The case with Goldman Sachs and its challenge with its new consumer bank, which is all digital, it's been a struggle. And it's lost quite a lot of money. I believe $1.3 billion launching in 2016 because it spent heavily to buy startups, cloud storage spaces and all of that. And loans have also gone bad at a very high rate as compared to, there are like very, very serious teething problems on how this model is actually going to take shape.
I think we're going to see many more hybrid models. We work with 20 of the major lenders in India, including Indifi, and we help them clients that they do. So we help with that digitization process, but we're not divorced for them or competing with them. We see ourselves as an enabler and a partner. So I think we're going to see many more of these models where fintech players come in the payment space, transfer space, in the lending space, and they collaborate with intermediaries and directly with banks. There's a nice model happening in India right now between traditional banks and NBFCs taking different parts of the book from each other. And so more collaboration than potentially there was, and that will be beneficial to the ecosystem.
Ashneer, taking it to you, and I'd like your comment on how efficient this entire system is going to be and, what are the kind of teething issues we're going to see. Underserved market like India, we've already got learnings from mature countries. Would you say that while we have seen a lot of commentary that with COVID-19, the acceleration is supremely transforming the digital space and all of that, would you say there is also a problem that is not talked about much, which is that of profitable lending? Because most of the market that is being served today has been shaken quite seriously. Many struggling for survival, many comatose, and hence in this great enthusiasm to spread wings, it's going to be challenging to really follow the philosophy of profitable lending.
Absolutely. It's pretty simple. Digital also gives you false comfort that if you can give a person an ability to repay, he will repay. Unfortunately in life, it doesn't happen that way, right? Intent is different, capability is different. Thankfully for us at BharatPe, I started my career in a bank. I worked for 9.5 years in banks before I moved on to the darker side of startups. But one thing that you learn is that nothing beats simple common sense in business, right? So whether you are doing physical lending through a DSA or through your own agents, or you're doing a purely digital lending, which is saying, I will not meet you, but I will give money to you. You have to be very clear about underwriting, right? Good underwriting will beat a good product or a great interface any day. So my view on the lending piece is that when you go out to lend, don't get super excited to dole the money out. Build a $10 billion book overnight. Doesn't mean I will go and do it because in lending, there's no point in taking the first bus which comes, right? It is taking the bus gets you safely across and it might be the third, fourth bus. So it's a business of saying no. Unfortunately, in startups, you are not taught to say no, right? Like you're supposed to say yes to everything. So I think that's the thing most people will have to get comfortable about, that you are still doing a startup, you're still doing a digital business, but you will say no to business, right? And as long as that is ingrained in you, you have the elements of building a great lending business. Lending is all about saying no to 4 people and while you say yes to 6. And as long as directionally that is happening, you are on the right track.
Mr. Barua, coming to one of the biggest challenges that one will see in this whole digital banking transformation, which is really, the fact that it's going to become even more vulnerable than it already is. And I'm talking about, security. Indian cybersecurity market was already $2 billion in 2019, estimated to grow to about 3 billion by 2022. I don't know if that's on track, but having said that, wouldn't you agree that, given that banking environments heavily draw upon collaborative ecosystems where, thousands of networked computers and connected devices have to function in a cohesive manner. To that, now you add social, cloud, mobile, other channels, and it's continuously dynamic and evolving. The financial vulnerabilities are something that we've just not envisaged.
Well, I think there are technological solutions to this, and I think we need to. One of the problems, one of the vulnerabilities of going digital comes from the quick obsolescence of technology, and in this specific case of cybersecurity, keeping up with those who would commit cyber fraud in terms of keeping your security screens as technologically complex, or being able to sort of handle the kind of stuff that they use to commit fraud. But I think there is also an associated issue of just sensitizing. A lot of fraud actually happens through very simple processes, phishing, smishing, and so forth. So I think there's a huge challenge for Indian banks to just sensitize customers about some of these phenomena that occur, and that needs to be a continuous effort. For instance, don't click on something that is sent from an unknown email account. Don't give your KYC details to someone who's calling you and saying that he's from payment service and wants to KYC. So I think this accounts for a large part of fraud. And there are simpler solutions of the protocols within the bank in terms of data security, data sharing, various checks and balances to ensure that there is no leakage of financial information. So I think it's a complex, it's a complex matrix or a complex sort of basket of initiatives. Some at the very high technological end, and some financial literacy, if I could call it that, along with very careful and good housekeeping within the financial institution or the bank.
Nadia, let's talk about how do you see the whole banking system, with a digital lens panning out? Do you think this is going to be a very, very confusing time for the banking sector going forward, even more confusing than we already are in?
Well, I think there's an unprecedented opportunity right now. Just to give you some global numbers, which are quite impressive, the market for SME credit globally every year, meaning how much money sits on banks' balance sheets to be dispersed into that sector, is $1 trillion US. 4.5 trillion of that doesn't get dispersed because cost to serve is too high, not because those customers are not creditworthy. In fact, you see are more creditworthy often. So there's a huge opportunity in this evolving digital environment for lenders, the fintech players, the whole ecosystem to come in and capture that opportunity that until now was just going into the informal market and trying to get its financing there, which is inefficient for the financial institutions that exist and hugely inefficient for the borrowers because they just have too much. So globally, I think this is a shocking figure too. We have found that the average interest rate paid by an SME, the informal sector, is 35% interest. And it doesn't matter if you're in the UK or in India. How shocking is that? And these guys are actually servicing loans at that level of interest rate. So how much profit could the financial institutions be making off of them if they could actually just capture that? In terms of, is it going to become more confusing? I think there will be streamlining. We see in the UK, for example, 98% lending goes out of 4 major financial institutions. Banks are trying to capture that, but there has been a lot more consolidation of financial institutions than there has been in India. So probably we're going to see some consolidation happening, I would think, in the market, some streamlining, but also because of the hugely young and innovative population, we might see some leapfrogging and some more efficiencies in the market, which is what I'm really excited about because of collaboration opportunities.
Ashneer, if I could bring you in and ask you to take off from where she left. The fact that she said that the opportunity is so much because the informal sector, versus what, let's say, new age fintech companies are offering. I mean, the opportunity is limitless. Having said that, wouldn't you say that companies such as yourselves, just like traditional banks today, are also risk averse because there is a trust deficiency today. We need more enablers to ensure that who we're giving out loans to are credible enough, and that whole due diligence process, that whole enabling system needs to be more robust. Do you see this mess that we're already in being further exaggerated because of the fact that I'm not sure if there's a due diligence process which is completely digital, which we have mastered yet?
I think we need to acknowledge that lending is a risk-taking business, right? It's not about having 99.99% recollections. It is about having the 98% recollection and being comfortable about your economics at that percentage of recollection levels. So all lending businesses have an inherent delinquency ratio built in, and the people have to be really comfortable about those ratios. The opportunity is clearly what Nadia said, and that's exactly the space we are operating in. Everyone can take your PAN card and pull your CIBIL score. The CIBIL report, which is accessible to me, is also accessible to Indifi or to any other lender. So in some sense, we are all operating on the same data so far, and just tweaking our models slightly differently. What people like us at BharatPe are doing is slightly different. We are saying that common data is available to everyone. What do I know more, or what am I in control of more? We at BharatPe are in control of the cash flows of the small merchants, because to us, end of the day, all lending is all about cash flow. So if I know the cash flow position of my retailer and I know that I can deduct his daily installment, I don't have to wait for a week or a month end to deduct his installment, because I know he will not be prudent enough or disciplined enough to save that kind of money in his bank account where I can pull it out. But if I can deduct all amounts of money on a sachet basis every day, can I build a better business? And that's what we are attempting to do at BharatPe. And I think going forward, it's all about that. Are you in the cash flow of the customer or the merchant? And how smartly do you use being in the cash flow to build a smarter lending business about? So it is all about what incrementally do you know and control of your customer. It's not about what is already out there. But having said that, I will report lending is all about risk. So if you don't have the appetite for risk, don't get into this business.
Digital payments for masses cannot succeed without thinking of rural India. For that, just payments do not work, but with that, one needs to imagine linking to microloans and servicing. As artisans suffer due to lack of loans, how do you plan to link lending, as that is the biggest and safest loan area banking can make money on?
Basically, when you create lending product for MSME, and as Ashneer was mentioning, if you can get a product which gives you a good visibility on cash flow of people, right, then you can create a micro lending product for even that category of people. So if there's an artisan sitting somewhere and he's accepting digital payments, can you say, okay, I will create a product where a percentage of that every payment comes back to me as my repayment, and I'm sitting in line of those payments. So at Indifi, we do not work in the rural areas, but there are companies which are working for the rural customers, and there are products being created. So just to take that example forward, what Ashneer was mentioning, so we lend to a lot of customers through the digital route, and we sit in line of their cash flow. So we have visibility of how businesses are doing. So when this entire COVID thing struck, one of our large customer segments is people who are selling on e-commerce platforms, which include artisans sitting in say a handicraft manufacturer sitting somewhere in Jodhpur. We had the visibility that in the month of March, the business tanked absolutely to zero because all the e-commerce platforms were not taking any fresh orders, and that went through for the entire month of April. But the moment the lockdown got lifted, people bounced back at a very fast pace. And because I'm a lender who was sitting in that stream of cash flow, I had the visibility of how people's cash flows are coming back, and I could start taking my repayments again. So it is possible a combined product with payments and lending for the small segment of MSMEs is possible.
In spite of KYC, you still have defaults happening in repayments. Don't you think the digital banking ecosystem will increase such banking defaults?
I think these are two separate questions. I mean, KYC provides you with a certain basic information, but I think you have to go much beyond that and use either cash flow information, and HDFC Bank is recognized for its risk management practices, and you have to develop all kinds of markers and metrics to judge the creditworthiness of a customer. It goes much beyond just getting KYC details. And if you have a backend which is able to gauge, assess, and price this risk, and are in a position to say no to certain credit proposals that come your way, whether you are brick and mortar or digital doesn't really make a difference. It's just a mode of delivery. But as Ashneer kept mentioning, that the core business of banking, which is about gauging, pricing, risk, and also saying no to the riskier customers, that is not being substituted for by digitalization. Digitalization is a faster way of perhaps transferring cash or the loan to it. But the bread and butter business of banking still remains at the back end, and whether you are good at it or not determines your viability and profitability.
Yeah, and if I may add this, KYC is a very small component of your risk assessment. You are identifying the individual. You also have to identify his repayment capacity and his intent to pay. So within the three blocks that you will work on in doing credit assessment, KYC is probably the smallest piece. The two big ones are, does he have the capacity to repay what you're giving him, and does he have the intent to repay you? And KYC does not solve those two.
There are two factors helping India: one, the pandemic; two, rural penetration. Only those banks with the best and comprehensive digital infrastructure will survive. Digital banking is definitely for the masses. Do you agree? Do you want to take that, Ashneer?
What we are actually seeing is it's going to a branch, right, or standing in a queue. It takes time. There was a time in India when people had enough time, right, or all of us could take out time for these activities. Now the fact is, in the fast-paced life that we have, everyone is questioning that, why do I need to step out for this at all? I mean, why is it necessary for me to go to a branch or to speak to a branch manager for doing this? So, and that's where companies like us and other fintechs are building products on, saying you don't need to actually go to a branch or physically waste your time to do any kind of banking. It should be instantaneous. I keep telling people, why does RTGS work between certain hour and certain hour? Right? Like, NEFT has become 24/7, right? RTGS is working on the same system. It's a computer at the back end, right? So I don't know of a computer which needs a weekend off, or goes drinking after 5 and therefore can't do your payment. So I think these are very basic things which all of us are questioning, saying, why do I need to do things the way they were being done 25 years back? The other thing that happens is, in India, which is a very class-driven society, the biases come in. Technology, on the other hand, removes those biases, right? So you don't, if the other guy is wearing a chappal, or is coming suited booted, doesn't matter. He's on the other side of the app and he's gets the same experience irrespective. But if you go in a chappal to a branch, and if you go well dressed, you will know the difference, right? I mean, the branch manager will look at your chappal if you walk in a chappal. So I think those biases also technology takes away, which plays a critical role in a sort of a class-driven society like India.
There are clearly categories which do prefer to visit a branch. As I talked about, the large potential lies in the rural and semi-urban areas, and there I think people do want to visit a brick and mortar branch. And given my age, I'm full of nostalgia for the good old bank branch. So I think we'll have to, the banks have to cater to people like me, to the rural and semi-urban first-time entrants. So for a while, you can't have a complete, you can't aspire for a complete shift, despite the compelling advantages of digitalization. Aspire for a completely digital model, like say Pepper in Israel or whatever. So you will have to have a bit of both, because of preferences and choices that people have.
Ashneer, what would you say, in your view, is the path or the tenure that we as a country need to take, looking at all our unique facets in terms of embarking on the digital journey, and what avatar do you see it taking finally?
We are on the digital journey. I don't think we are any behind. UPI is world leading. There's no other network in the world growing as fast as UPI is, and therefore we are very well on that journey. I think we just need to, over time, find a good common ground where the fintechs operate, where the banks operate, and how both are benefiting from the digitization. So it should not be that the fintechs take away everything. I don't think that will happen. I think the banks will also become more wholesale services or API providers to the fintech companies. And I'm confident financial services in India will get digitized much before it does even in developed countries, including the US.
Mr. Barua, let me come to you. I want your closing comment, but I also want you to respond to what Ashneer said. Do you think it's advantage traditional banks simply because of the fact that they've got a brand name, they've got trust, they've got consumers, and they have legacy, and with the investment in digital, that entire force becomes even more formidable than just a new age fintech company, and so it is advantage you guys going forward.
I think the assumption of the characterization of traditional banks as these, dinosauric brick and mortar players is completely incorrect. I think we do have both internal fintech and a very close, alliances with fintech players. So I think it's going to be a collaborative journey. Digitalization is certainly going to be will be a principal driver of things going forward. Having said that, I just want to sort of re-emphasize what I said earlier, that there are issues very specific to the nature of the financial sector, the access to capital, for instance, that the regulator insists on, so the regulatory curbs that are put on deposit taking and so forth. That certainly gives traditional players an advantage, and at some point, fintech players who have a much better understanding of niches like what we would typically call subprime might just want to align with us to grow their businesses, because we have certain inherent advantages in our fiduciary responsibilities and the kind of brand recall and confidence that we enjoy with both depositors and borrowers.
I'll give you the last word, Siddharth, before I close this session. So, your last comments on, the path, when will we become a fully digital ecosystem?
No, so as I mentioned earlier, I don't think we will become a fully digital ecosystem on various methods. The digital part of the ecosystem will keep moving and will move at a fast pace, but it will remain a mix of physical and digital for some time to come. I don't think in the near future we will become completely digital across all facets of financial services.
Anybody else wanting to comment on the banking health going forward? I'll allow you to do that, Nadia, and then I'll take a comment from another panelist.
I think, the middle section of the Indian economy, from MSME up to the medium-sized companies, it's badly underpriced considering the value that's there. And as this move to digitization happens, we'll be able to see a lot more increased investment there, which is what I think is most exciting about being in the market and why we're delighted to be in India working there together with the financial institutions.
Would you agree, Mr. Barua?
No, absolutely, and I'm glad Nadia talked about the huge efficiency gains that medium-sized companies can get from following digitalization. And I'd also like to keep emphasizing the fact that financial digitalization is part of a much larger public policy initiative that the government is taking in various domains. And there is a synergy between different areas of that are experiencing rapid digitalization. So in more ways than one, and in certainly more ways than just financial digitalization, a digital world is perhaps the only option sort of that would remain for all kinds of things across the board.
Fair enough. Well, on that note, thank you so much.